Hi, welcome to the Market Alert for Thursday, the 7th of September 2017. So yesterday in the pound, fairly quiet. We did have a potential buy signal here, but again you can see the three bars that followed were fairly quiet before we got the market to fill this on the 4th. Market retraced and then moved up, but you can see from the chart we can't even see two psychological lines there, so you can see how narrow the range was for the session. Fairly quiet indeed. And in the daily chart you can see the market's moving up. We looked at this yesterday, and market trading to the 62% retracement 130.795, which we pointed out yesterday, and also the one below it 130.53 there. So again, the market just waiting for news, and that news today is going to come in the way of Mario. Super Mario is out today. He's going to be speaking at 1:30. So I'm just trying to do two things at once here. Obviously very difficult for a man to do. Yeah, so what we've got, just having a look through the rest. Yeah, so really the only biggie of the day, or two, is Super Mario speaking at 1:30. He seems to be backtracking on what he was saying before, according to Zero Hedge. I'll spare you all of that. It's on there if you want to have a look. And then we've got the crude oil inventories out at 4 p.m, which usually were out yesterday, but because the US was closed on Monday for the Labor Day celebrations, it gets put back a day. And that's probably the reason why Wednesday became Tuesday, or rather Tuesday became Wednesday, I should say, this week. And we know that Tuesdays can be quiet because the market factors in the news from the weekend on a Monday, and then Tuesday there's nothing to really move it, and this was a case of yesterday. Very strange activity, I have to say, and unfortunately I was missing, as I mentioned in yesterday's Market Alert. We're invited to a 50th wedding anniversary lunch, and by the time I got back, the first part of the session was already over and done with. But the market's a very interesting picture here, because you've got the market being forced down. With not being here, I don't know what actually caused that, but you can see that the buying came into the market and they brought it back above the 21,800 level, and then we had a buy signal, a usual sort of activity retracement, and then the market moving higher. But very strange day, whether it's the markets are waiting for, well, they are definitely waiting for something, and that one in particular is, if we just come over to here and to here, we see that Fischer is going to step down. The vice chair of the Federal Reserve is going to step down in October, citing personal reasons. And also, as you see here, which is also very interesting, I think now there are 4 vacancies available at the Fed. So again, it's a classic case, as we said before, about the rats leaving the sinking ship. And also yesterday there was a discussion on the debt ceiling, and amazingly earlier today, when Trump flipped on the GOP, that means flipped from the Republicans and aligned with the congressional Democrats at the White House meeting to fund government and raise the debt ceiling through to December. So the end of this month's volatility that we were hoping and praying for has now vanished. And once again we've got the classic case, as you see on these charts. I won't bore you with the yield curves and the yield differences, but this bit here was exactly what we're looking for, that the can has been kicked out on the road once again. And this has been a pattern for the last 8 years with all central banks. If they can kick it, they will, but eventually they're going to run out of road. So we could see what possible sort of market falling apart in September, October, unless something comes out of the woodwork. This can has now been kicked towards the new year, as it were, so December, end of December. So just going back to the Dow in the daily chart, you can see that this market is sideways, stuck in a range, and not doing an awful lot actually. It's been volatile for the odd day, but it's starting to become quiet here. Let's hope that the crude oil figures and Super Mario can cheer the market up a bit today. There's nothing really to move this market higher, so any sort of attempt to move higher at the moment, as you can see, is being hit every time they move higher. It's being hit. So again, keep that in mind, that this market is sort of beginning to develop a range bound or a defined range bound sort of market there. And also, just to go back to the 5-minute chart, here's the reaction when Fischer made his announcement, and Gary Cohen also said that he wasn't going to be Fed chair to replace Yellen in June, I think, of next year. So again, the market drops, and the usual thing, they buy the market back and then bring it back to where it was prior to the news coming out. And that's at the moment just sideways. Right, let's have a quick look at the implied volatility before concluding. So as you would expect, yesterday the implied volatility down to 8.86 from 9.83. And again, we've got this, it's a bigger range bound market, but it's more volatile than we've had through May to July. And then of course, latter part of July through to August. So you can see that the range is slightly bigger. But back in these lows again, sell the volatility. That's the new game in town. Keep selling the VIX futures contracts to bring the volatility down and make it look as if everything is fine. But we all know that when there's no volatility, eventually it explodes. It's like the hurricanes that's approaching the Florida coast this weekend. Incredibly calm there at the moment, and then when, of course, it hits, all hell's going to break loose, and that's going to be the markets too, going forward, because eventually this has to end. And even I can't think of his name now, the chairman of Goldman Sachs has said the markets have been going up far too long. I can see him, but Blankfeld, I think his name is, or something like that. And he said exactly the same. And I'm not a fan of Goldman Sachs, but I would have to agree with his comments there. Yeah, Lord Blankfeld, I think his name is. Right, that'll do it for today. I'm going to take some memory pills, and as ever, thanks for watching. See you in the next one.